Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So today, as you can see, markets have opened slightly up, and gold market is not an exception, but I think that is just market just trying to find a balance. We should not pay too much attention to this action. And today in the first video we have prepared an Australian dollar, and it's not occasional. It's today currently the Australian dollar shows really interesting trading setup, not only on the daily chart but on the weekly chart as well. And actually, as you know, the Australian dollar has big relation to the gold. Sometimes Australian dollar is called as a golden currency. It's just because Australia has the big part of its export the presence by the precious metals, and that's had to explain some relation between the gold and Australian dollar. And I would say that indeed today on the intraday charts we have very similar situation, but still some difference exists. So if an Australian dollar on a daily chart we do not have yet any grabbers, on the gold market we already have them. So you can see we have two grabbers, both suggest taking out of the previous lows right there, and that we should treat by far as just a pullback, a retracement of this most recent downward action. So that's actually the same as an Australian dollar today. On the 4-hour time frame chart we talked about two moments. First of all, market right now is forming some kind of the bearish consolidation, which is a flag pattern here, suggesting, well, a flag usually is downside continuation pattern, so it's some consolidation then downward continuation. And before that we talked about the tendency. So market actually here was having the tendency of the higher lows and higher tops, as two step forward, one step back, and so on. But on the last time, surprisingly, last moment before the holidays, market was not able to proceed this tendency to continue it, and has formed lower top. But at the same time, the sequence of higher lows still holds. And we said that once market will form a lower low, it will be another confirmation of the breaking of this tendency, and that market could then start moving down with a faster. So that's actually what we would like to see in the nearest few days. Finally, on the 30-minute chart, on the hourly chart, you could see a pattern that's very similar to our Australian dollar. As in Australian dollar, as in gold, we have the shape of the ABCD retracement. Recall that initially we were considering minor ABCD pattern here, but recently these lows stands below the previous one, and that's why initial ABCD pattern is not valid anymore. The new pattern that we have here is ABC bottom. OP has been reached right there, and take a look. The OP creates an agreement with the 18 or 8 major fib resistance level. So potentially this area is interesting for considering taking the short position. Besides here we have a local tactical gap opening today, and really big chances that market will try to close it. So at least you have really good background for moving stops to the break even, that market could just drop at least 17.98, 80 even. Let you to move stops to the break even and even get some money, and this market will close the gap. Then we will see what will happen. Maybe it will not become the starting point of the big reversal, although I hope that it might be. But at least even the closing of the gap makes this attempt to go short on the gold market rather attractive. So you have a good resistance, you have grabbers, you have garbage triple to sell pattern and unfilled gap. So this combination creates nice chances that market will drop at least for $6-8 per contract to the downside.